Imagine, like, $390 billion just vanishing. No explosions, no bank runs, just poof.
Yeah, totally gone.
Exactly. Welcome to your custom deep dive.
Today, our mission is unpacking the weekly crypto analysis from Vantage Plus. This is the report published on Monday, June 8th, 2026. And, looking at the charts, it's Bitcoin's worst trading week since the FTX collapse back in November 2022.
Right, and that 390 billion, it isn't just numbers on a screen. It's a massive unwinding of market confidence.
It's brutal.
It really is. Well, you can think of it like a blockbuster movie that suddenly loses its entire budget mid-production,
Oh, that's a good way to put it.
Yeah, like the sets are built, the actors are ready, but the financial lifeblood just evaporates. So everyone just has to abandon the project.
Okay, but what's actually draining the budget here? Because crypto was historically supposed to be the rebel, right? Like the asset class that ignores traditional finance.
Yeah, that rebel narrative is officially on hold for now. It definitely seems like it from this Vantage Plus report. It looks totally tethered to the broader economy.
Firmly in the grip of the US dollar and traditional equities, yeah. When you see heavy outflows from Bitcoin ETFs.
Which is basically institutional money pulling back, right?
Right, exactly. That plus a strengthening US dollar means crypto takes a direct hit.
Let's break that down for a second, though. Why does a strong US dollar automatically mean a bad day for digital assets?
Well, because global assets, and that includes digital ones, are priced in dollars. So when the dollar gets stronger, risk-on assets inherently become, more expensive to buy.
And less attractive to hold.
Exactly. And then you add in mounting fears that the Fed might hike interest rates, and investors just flock right back to the safety of cash.
So we're seeing actual spillover from traditional indices.
Yeah, the S&P 500 and the NASDAQ started losing momentum after their recent highs. That fading sentiment acts like this huge gravitational pull, just dragging crypto down with it.
So when the macro weather turns sour, the technical charts immediately show the damage. Like, looking at the heavyweights, Bitcoin is trading around $62,742.
Yeah, down nearly 20% this month.
Right, and it even briefly slipped below that psychological $60,000 mark.
Which brings us to the ultimate battleground, really, the 50 moving average, which is currently sitting at $59,380.
And for anyone listening, that isn't just a random line on a chart.
No, not at all. It represents the average price over the last 50 trading periods. When the price dips below that average, it triggers algorithmic trading bots and panicked retail investors.
Right, setting off those automated sell-offs.
Exactly. It is literally do or die, stay above it, and a rebound is possible. Drop below, and the algorithms just accelerate that downward momentum.
Yeah, and that makes the stakes a lot clearer. And Ethereum is trapped in a really similar technical nightmare, right? Trading at $1,639.
Yeah, the report notes it completely broke its rising trend.
It's like bumping against a glass ceiling. Now that $2,040 mark is acting as heavy resistance.
Right, because once a rising trend breaks, the previous floor basically becomes the new ceiling. That $2,040 level is now a prime zone for short positions.
Meaning traders are actively borrowing the asset to sell it at that ceiling, betting the price will fall so they can buy it back cheaper.
Yeah, exactly.
So they're basically setting up a wall of sell orders, making it incredibly hard for Ethereum to break back through.
You nailed it. And here's the ripple effect. When liquidity drains out of the relatively safer heavyweights like Bitcoin and Ethereum,
the smaller altcoins are left completely exposed.
Right. They feel the macro pressure tenfold.
Which explains the absolute bloodbath further down the market cap ladder. Ripple is trading at $1.1471.
Practically clinging by its fingernails to its own 50-moving average at $1.1300.
And if that sharp drop we've tracked since last October pushes Ripple through that average, what happens?
Well, there really isn't much to catch it. The next real historical floor isn't until the $0.6500 range.
Oh, wow, that is a brutal drop. And Solana looks even more precarious at $64.88. It fell sharply last week and broke right through its $80 support zone.
Yeah, it really fell through the floor.
So using that theater analogy again, this isn't just a slow elevator going down. It's like a trapdoor on a stage giving way.
Right.
Once the floor drops out, where does the elevator stop? Are they just hitting the basement?
Unfortunately, yeah. The basement for Solana, according to the charts, is all the way down at the $30 long-term support zone.
Wait, $30? Really?
Yeah. To even regain real upward momentum and patch that trap door, Solana needs a massive influx of volume to push it back above the $100 mark. Like anything less is just noise.
Wow. So Synthesizing this for you, the listener. Right now, the crypto market is in a full defensive crouch.
Yeah, so
From the heavyweights to the altcoins, digital assets are just fighting to hold on to key moving averages while being battered by these traditional macroeconomic headwinds.
right, the broader economic weather. I mean, dollar strength, rate hike fears, equity momentum. It's entirely dictating the climate for crypto today.
Yeah. Which leaves you with a really fascinating question to chew on as we wrap up. If traditional economic levers and shifting institutional ETF flows are currently writing the script and dictating crypto's fate, what fundamental shift will it take for digital assets to finally decouple?
That is the big question.
Right. Like, when does this market get its budget back and chart a truly independent course again? Definitely something to explore.